Manager for long-term care and disability income here at Financial Brokerage. I'd like to say thanks for you taking your time out of your busy Monday to join us this afternoon. And with me today is Kim Purnell. Kim is our quote-unquote virtual wholesaler for long-term care with Transamerica. And Kim brings over 26 years of experience in the long-term care insurance marketplace to the table today. So Kim's going to be talking to us a little bit about beginning that long-term care conversation with your clients and maybe a few other sales ideas. And with that being said, I'm just going to go ahead and turn it over to Kim. Welcome, Kim.
Great. Thanks, Tim. Thank you, everyone, for joining us today. You know, this is a fairly lengthy conversation to have with a client, so I am going to be shortening it. I shouldn't say shortening it, because expediting it would probably be a better phrase. You know, this is a part of the sales experience that unfortunately a lot of independent producers don't get exposed to, quite frankly. And as Tim was saying, you know, 26 years of experience, one of the things that I try to bring to the table is not just product, but some insights as to how to sell insurance in general, and more specifically long-term care insurance. This is a challenging sale, and a lot of agents don't do a very good job at it because they try to either use statistics or they try to get into the brochure, get into the illustrations, and clients haven't been taken through the process of understanding what this is and how it actually works. So hopefully today that's what I will be able to do. And for all intent and purposes, this is part one of a two-part presentation. This is the engaging of the conversation. Part two of this, which we will not be going into today, has more to do with implementing the programs, how to reinforce what it is that you're recommending to a client, and how to get them to engage into the decision-making process. But the first thing I want you to understand about long-term care insurance, it's really no different than any other buying decision someone makes. I want you all to think about this. Anything that you've purchased, it really doesn't matter what it is. You fundamentally think of three issues. Do you need it or want it? Do you like and understand it? And can you afford it, right? So I'm going to take you through this process. And this is the process by which you have to engage and follow. Otherwise, you will never successfully market or sell long-term care insurance. The biggest challenge, though, is how to engage the conversation. How do you get the individual to need and to want it, right? So, you know, one of the conversations that I always try to help an individual engage with, and I'll go from here, is Mr. and Ms. Clients, what have been the personal experiences of either you or your family or close family members have been affected by with this considerable cost associated with unreimbursed medical expenses? You know, what are the consequences and what are the emotional burdens of having extended care provided for a loved one? You know, this is a challenging conversation, but you have to engage it, right? You know, you want to engage that client and say, okay, Mr. and Mrs. Client, what conversations have the two of you had regarding this particular subject? What levels of support would you and your spouse wish for when that day comes and for which these unreimbursed expenses become unsustainable, right? You've got to have this conversation with the client. This helps them open up, right? Helps them open up and talk to you about what is important to them. Many advisors will get into these conversations and go into yes and no questions. You're going to find that in this presentation today that we try to avoid that by helping you understand conversations. So another example might be, based upon your personal situation, what would the financial consequences be to one another if this event were to occur? The word consequences elicits a response. You know, so think about how you ask that question to a client. You know, Mr. and Mrs. Client, what are the emotional, physical, and financial consequences to your family if this option of providing this level of care were to fall on them, right? Because you want to engage them, because many of them might say, what happens, or maybe I will have my son or daughter-in-law take care of us. Maybe we're going to move in with them. By addressing the conversation up front and asking them what are those emotional, physical, and financial consequences to those family members. And be assured there is a physical, emotional, and financial consequence when care is provided by either a child or by an in-law or by another family member. There is a consequence. Think about yourselves, right? You've probably had situations where you've known of care or have had to deal with care, and usually there's an alpha child who will step up and take care of an individual or take care of a family member. It is usually that alpha child who takes on the burden, and unfortunately not only the emotional burden but the financial burden, and that creates a hardship a lot of times with siblings and other family members. So again, you got to understand how to have that conversation. Mr. and Mrs. Clients, once placed in a situation of needing care with this level of support, and assuming it is for an extended period of time, what is the ideal situation, and how would you like for this to play out for you and your family? Now, this is obviously a loaded question and a leading question, but it is a question that will drive them into the conversation that you want them to engage in. Because what is the answer, right? What is it that most people will say to you? They will say, well, I want to receive care in the comfort of my home for as long as possible. And that's where you're driving the conversation to get them to need it and want it. Because what is the alternative? The alternative is going to be, what? A nursing facility, being in an environment that they wish not to receive care in, being in an environment for which family members are supporting them. Okay? So at this point in time, you will need to demonstrate to the client in a way that he understands how long-term care insurance will meet their needs and their wants and minimize those consequences to them and to their family members. And you do this when you start to position a particular product. So in this example, we are going to position Transamerica. At no point in time will you see that we get into an illustration system. We bring out brochures or anything along those lines, because in order to demonstrate something in a way that they can understand it, they have to like it and understand it. Again, think about your buying decisions. You either needed it or wanted it, right? Then when you felt that you needed it or wanted it, you had to either like that particular item or you had to understand how it worked. So, Mr. and Mrs. Client, obviously you've purchased different forms of insurance over the years. The purchase of insurance is the transfer of risk from you to an insurance company for pennies on the dollar. This is obvious, but you wanted to start thinking about how insurance works, right? So when you make a transition, you generally purchase various levels of insurance, generally in dollar limits or value of amounts, maybe $100,000, maybe $250,000, maybe $500,000 or more. These are the amount of insurance or blocks of money that are determined based upon the value of what you, Mr. and Mrs. Client, are looking to insure in the event there was a loss or if someone needed to provide for care. This is what long-term care insurance and what I'm going to talk to you today about, because long-term care insurance is really no different, Mr. and Mrs. Client. One of the considerations that you would want to think about is what percentage of your savings or your retirement assets would you want to protect today in the event there was an unreimbursed medical expenses that would place a drain on the assets for which you have saved. This starts to help them think about what is the impact today. What portion of their portfolio do they want to insure? Do they want to insure 100% of it? Do they want to insure 50% of it? Maybe they ultimately want to self-insure. That's part of the conversation. Okay? So this is an example that this is $250,000 of insurance available to you today for those unreimbursed medical expenses associated with long-term care over an extended period of time. And in this example, what I might do with the client is on a piece of paper is draw a circle. And inside of that circle, I would put this amount of money, $250,000, $500,000, whatever it is that we've started to talk about. Now, when it comes time for care, the insurance company will pay from this account value, this $250,000, the reimbursed cost associated at a predetermined level. These amounts are paid when benefits are triggered based upon industry standards designated by a plan of care by your healthcare practitioner or your doctor. So, Mr. and Mrs. Klein, when that day comes, it is your doctor or healthcare practitioner that will determine the eligibility for when benefits are paid from this insurance policy. Now, when this day comes, and this again is your pool of money, care can be provided in one of three environments. It could be provided in a nursing facility, it could be provided for in an assisted living facility, or where was it that you indicated that you would prefer to receive care? Now, most, again, clients are going to tell you what? They're going to say, I want to receive care in the comfort of my home. So again, you're getting them to understand what the policy is about. Now, again, where was it you indicated that you wanted to receive care? And that was obviously in the comfort of your own home. Now, Mr. and Ms. Client, that's what I'm here to talk to you today about. But before I do that, I want to talk a little bit about how a policy works, right? And I am certain that you are familiar with the term deductible. An example of a deductible may be your auto insurance where you had a $500 deductible. Well, in the world of long-term care insurance, the deductible is actually referred to as an elimination period. The elimination period is determined by the number of days when the insured is receiving care for which there are no benefits paid by the insurance company. So this is the first thing that I want you to understand, that when we start talking about the policy, that there is a deductible. And obviously the deductible ultimately will have an impact on the cost of insurance, just like it does with your automobile or your homeowner's insurance. Now, Mr. and Mrs. Client, when that day comes for when you receive care, you know, one of the companies that I represent and recommend is Transamerica, and I'm going to represent them here today. And the reason that I'm going to do that is because Transamerica does not require an elimination period for when you receive care in the comfort of your own home. What are your thoughts about that? Right? And I will ask that question. What are your thoughts about the fact that when you receive care in the comfort of your home, that there is no elimination period or deductible? Now, this is where you get into positioning of product, right? You're positioning your carrier. You're positioning it to the client in a way that he or she will start to like it, right? Because remember, that's step 2 of the process. Step 1 is establishing the need. Step 2 is getting them to understand and to like it. Now, Mr. and Mrs. Client, when it comes time for you to receive care in the comfort of your own home, do you want you and your family to have control over how the benefits are paid, or do you want to relinquish 100% of that control to the insurance company? Okay, obviously a leading question, and you know what they're going to answer and how they're going to answer it. They're going to obviously say, well, we want to have control. Okay, so again, I'm positioning. Well, Mr. and Mrs. Client, again, the reason I'm going to recommend Transamerica is that when that day comes for care, where care is required, you and your family will have the choice of utilizing what is referred to as a cash benefit. This is included in every Transamerica long-term care policy. This cash benefit will allow your family members, your friends, somebody from the community or from the church, anyone at all that you decide to provide for your care. Transamerica has a cash-based benefit that we'll talk about a little bit later, but it will allow for the policy to pay for that level of care. Again, what are your thoughts about that, Mr. and Ms. Client? They're going to tell you exactly what you think they're going to tell you, and that is, wow, I like that concept. I like the ability to have control over how the benefits are paid. I like the fact that I can have a friend or family member of my choosing. Okay. Now, Mr. and Mrs. Client, in addition to the 0-day elimination period, those are just 2 of the many benefit features within the Transamerica product, but there are other important benefits also included in the Transamerica benefit or in the Transamerica policy, for which this is the reason why I'm leaning towards Transamerica and feel that this might be the company for you. Like many of my clients, if you go on claim, I want you to understand that they have a benefit called a return of premium. I'm sorry, a waiver of premium. The waiver of premium simply says that if you go on claim, you don't have to worry about paying for your premiums while you're receiving care. That could be care in your home, care in a nursing facility, or care in an assisted living facility. Mr. and Ms. Client, they also have a benefit that, like many of my clients that purchase, they're in their 40s and 50s and maybe even in their early 60s. What happens if they have an accident? Well, Transamerica says that if you receive care as a result of an accident, whatever benefit that you're entitled to, it can be paid up to 2 times that benefit or up to double the amount of benefit on a monthly basis for care as a result of an accident. They have many other features and benefits in their policy, such as hospice care, a stay-at-home benefit to help from remodeling your home in the event of needing to maybe have doors widened, wheelchair access, grab bars, things along those lines. But one of the things that many of my clients will say to me is that, well, what happens if I never use it? Well, Transamerica says that if you were to purchase this policy and you were to die prior to age 67, all premiums paid would be refunded to your beneficiary or to your estate, minus any claims paid. There are other considerable benefits within the policy that we could talk about a little later that would maybe be suited or not suited for you, and each of these will vary based upon individual comfort levels. And again, we'll talk about that a little bit later. But, one of the other reasons I'm representing Transamerica to you today is because, obviously you recognize the name brand of the company, the Pyramid. It's something you see on many news channels, sporting events. But, they have such strong financial ratings. You want to make sure that the company is there not only today, but 20, 30 years from today as well. So they have some of the highest financial ratings in the industry. But one of the ratings that means the most is what is referred to as the composite Comdex score. And with Transamerica, they have a 93 Comdex score out of a possible 100. That is among the highest in the industry. And again, in this particular marketplace, that's very, very important. Not only do they have those financial ratings, but they have a long history of putting and insuring policyholders. Over 25 years, over 400,000 policies now. The company pays over $1.7 million per business day for claims to their policyholders who are in need for long-term care. So with Mr. and Mrs. Jones, when we take a look at this, now this is going to take me back to the third fundamental consideration for long-term care insurance. Remember we said that they have to need and want it, right? They have to like and understand it. And the third one is going to come down to affordability. So I have positioned the need. I've shown them how the policy works without going into an awful lot of bells and whistles and features and illustrations. And I got them to engage with me and to reinforce that they liked the ability to control how the benefits are paid. They like the 0 day. They maybe like the different benefit options that I touched on, again, depending upon what their particular hot button may have been during our conversation. So now I've got to get them into the purchasing aspect of it to help them put a program in place, right? So this is all part of that conversation. Well, Mr. and Ms. Client, I'm confident of the financial stability of Transamerica, and I'm sure you've, again, noticed the company and who they are, and a company that's been around for a long period of time. So what are your thoughts if we can help you put a program in place today with Transamerica and do it in a way that doesn't affect your lifestyle, right? And that's a very important question. And look how it is phrased and how it is asked. Because, again, we've created the need, we've shown the policy in a way that they like and understand it, and now we're going for the commitment. So what are your thoughts, Mr. and Ms. Client, if we can help you put a program in place and do it in a way that doesn't affect your lifestyle? It is obvious that they're going to say, well, that makes sense, or they're going to say, what does that mean? Or they're going to say, what does that cost, right? Well, again, we can help you put a program in place that doesn't affect your lifestyle, and let me demonstrate how. Now, this is going to lead into the second phase of the conversation with the client. As I mentioned earlier, this is a two-part conversation. But at this stage of the game, once you've gotten them to commit, you have to also demonstrate to them how things are paid for. Again, think about your purchasing habits. Whenever you purchase anything at all, you pay for it in one of three ways, or possibly a fourth way, which encompasses the other three. One, you pay for it from income, you pay for it from principal, or you pay for it from your interest on your principal, or the combination of the three. So Mr. and Mrs. Client, you know, when we talk about putting a program in place, we have to look at a number of different considerations. I see from your portfolio that you have, you know, $50,000 here, $125,000 there, you have an annuity here, you have some investments there, you have some income coming in, you know, you may have some discretionary income. So what are your thoughts if I could possibly help reallocate some of your assets, and instead of getting, you know, 2 or 3% return, we get you 3 or 4% return? What are your thoughts if we use a little bit of your interest and a little bit of your principal? What are your thoughts if we use some interest income, and some discretionary income? Because what you've got to do is you've got to get them to commit that if you help them put a plan in place, that they are willing to make the commitment and pay for it, right? They've got to help you help them. And where many insurance folks in this marketplace, what do? They will talk to a client. Either the client has brought up the subject to them, or they'll say, Mr. and Ms. Client, well, you know, we need to talk about long-term care. The cost is $80,000 a year, and, you know, it's only going to increase, and the odds of needing long-term care is this, and, you know, what's going to happen to your family statistically. And by the way, I represent 14 insurance companies. 3 of them happen to sell long-term care insurance, and I think, you know, the average cost is $200 a day, and da-da-da-da-da, and they show a brochure, and the client gets overwhelmed, and they all of a sudden show a premium that the client has sticker shock, right? So once you've gotten that commitment from them, then you go back to your office and say, Mr. and Ms. Client, you know, what I need to do now is, based upon what you've told me about your assets and what you've told me about your investment risk tolerance, you know, I need to go back to my office, take a look at some ideas, and I'd like to come back out, maybe talk to you next week, or meet me here in my office. And what we will do is we'll look at, you know, 2 or 3 possible scenarios. What are your thoughts about that? All right. So this is the conversation. This is where agents just fail to understand how to engage the client, because you've got to engage the client in a very structured way. You've got to get them to understand it. You got to get them, well, first of all, to need it, but they got to understand the need by engaging the conversation in the best word. If you cannot remember anything else from this conversation, remember consequences. Fall back on that word, because it'll always elicit a response from a client. You establish the need, you create the product in a way that they understand it, and you get them to commit by simply asking them a very important question. Mr. and Ms. Client, you obviously recognize the need. We want to mitigate the risks to your portfolio. You understand how the policies work. You understand that we're looking to try to keep you in your home and keep you together, and again, mitigate or minimize any kind of financial and emotional burden to your family members, and we want to do it in a way that doesn't affect your lifestyle. So, Tim, that is pretty much it in the conversation aspects of it. Again, keep in mind that this is a conversation that does take some time. You know, we are limited today in our conversation. You know, we want to keep it to 30, 35 minutes thereabouts, and then have some question and answers. So, Tim? I'll turn this back over to you.
Well, thanks, Kim. Thanks for giving us some great information and some helpful sales ideas to take away with us today. At present, I don't see any current questions, but if those of you on the call today have any questions or need any help with any kind of product questions or sales ideas, supplies, illustrations, anything of that nature, please don't hesitate to give us a call here at Financial Brokerage. Our toll-free number is 1-800-397-9999. And if you are currently not yet contracted with Transamerica, we can make that quick and easy for you also. Just visit our website, which is financial-brokerage.com. Click on the contracting tab, and you can contract online in just a few minutes. But thanks
Jim,
again, Kim. Yeah, go ahead.
Well, hold on. Before we go anything, just a couple of things. Just, a lot of times I'll get agents that'll, want to throw out objections. They may say, well, I have a client who says this, or has a client who has an objection to that, or the client who says, maybe I want to shop it. Maybe I want to look at my brother-in-law that sells this, So if those are questions, those are valid questions, and understand that, in that positioning, right? Let's say someone came to me and said, well, I like the concept. I believe in it. I know you're representing Transamerica, but maybe I want to see what my brother-in-law offers, right? And I say, okay, Mr. Client, that's fair. I represent several companies, not just Transamerica, but you had indicated to me that you wanted to retain control, right? Well, Mr. Client, is retaining control is still an important consideration. Are you willing to relinquish that control to do business with another carrier? Are you willing to give up the financial stability of the carrier? Are you willing to give up the elimination period? Are you willing to give up the return of premium? These all have an impact, right? So, don't be afraid of objections, right? And by positioning in the way that I do, more often than not, you can knock out the competition simply by positioning product in a way that the client understands it. And for the most part, most competitors cannot do that. So just keep that in mind as well. So if you have any objections or you have some comments that you would like to shoot over to Tim, I'll be glad to put it in writing for you and send it back out to you. So
great.
Okay.
Thanks, Kim. Thanks again. And thanks to all of you for joining us this afternoon. Let's make it a great week and happy selling. Thanks for joining us.
Guys,
Bye-bye.
Thank you, Tim. Thank you, everyone.